Hey guys, so welcome to this YouTube video. Today I'm going to be showing you guys my strategy and how I trade the market every day. And you guys are free to, subscribe and because every morning I post videos of the trades that I take every day. You can see with live how I take the executions and pretty much everything. But today I'm going to show you guys my strategy and that way you guys get to follow me live on how I trade. Um, so let's start from this. Okay, we're going to use something pretty easy. So as of right now, we can see, so we see this bullish candle right here, right? So what we see is this bullish candle over here takes out the high of this previous candle right there. We can all see that this bullish candle takes out the high of that candle right there. And it also does take out the low of this candle right there. So what that means is this candle is a bearish candle because it took out the high and the low. So we go ahead and draw that down. So now I'm gonna show you how I pretty much can count the candles. Okay, so this is a down bar. This previous candle took out the high, doesn't take out the low, so this is going to be an up bar. Same with pretty much everything else here. Up bar, up bar, up bar, up bar, up bar. So these are all up candles. So these are all bullish candles. Now something that's going to be tricky is, so if you see this bearish candle right here, as long as it doesn't take out the low, this is still going to be an up bar because this candle took out the high. So this is going to be an up candle. This is going to be a down bar because this one took out the high and the low. So down bar. Now this one doesn't take out the high or the low, but this candle is going to automatically become what the previous candle was. So this previous candle right here was a down bar, so this is going to be a down bar as well. Now this one doesn't take out the low. I mean, we're looking at equal lows on this one. Yeah, so we're looking at equal lows on this one. So this one doesn't take out the low. So this one is going to be an up bar. So up bar, up bar. This one took out the low of the candle, so it's going to be a down bar. This one took out the high, up bar, up bar. This one doesn't take out the low or the high, so it's going to become what this previous candle was, which was an up bar, so this will become an up bar. This one took out the low, so this is a down bar, up bar, up bar. This one took out the low, this cancel. This is going to be a down bar, down bar. This one doesn't take out the high or the low, it's just going to be what the previous candle was. This is a down bar, down bar, down bar, and a down bar. So that is how you count. That's how you count the candles. So as you see, everything pretty much here is up bars. Then we have down bars. Now I'm going to show you how that correlates into trading in the market. So let's go ahead and look at this. As of right now, I haven't looked at the bias or anything on the day. All I can see here is this break of structure to the upside, right there. So and I go ahead and draw my order block down there. Okay. So this is my order block right there. As you can see, this move doesn't take out the low. So what happens is inside this order block right here, you can see this down bar. This is a down bar because as you can see, it took out the high and took out the low. So this is going to be a down bar. So we have a down bar. What do you have? What else do we have? We have a down bar again because this previous candle took out the low of that candle. But how we're going to enter this trade is by looking at this. So this is a down bar. This next candle comes out and takes out that high. So then we go ahead and get into the trade right there. So pretty much our entry is going to be right there. It's going to be entry at the high of that candle. So we enter on the high of that candle right there, and we put our stop loss at the low of the candle right there. Okay. And like I said, I mean, this whole trade right here. No. Yep. So this whole trade right here was a 1 to 5. And the reason why I say a 1 to 5 is the people are gonna ask you where you're targeting on this trade. So two things you could do is I like to go in two contracts at first. This is going to be my buy side over here. So I like to go in two contracts at first. So if I go in two contracts at first and I go in from right there, this is 158 ticks, 162 ticks. So that's about 162 times 10. So that'd be 1620. That's how much you would have made on that trade. So at the same time, if this went against you, you would have lost, I would say 3,200. But like I said, we're going off the 1 hour time frame. Usually we're going to be using the 2 minute and the 1 minute, 3 minute stuff like that. I just want to show you pretty much clear structure so that way it makes it easier for you guys to understand. So That's how you'd have gone on this trade. And if you got it on this trade right here, all you have to do is every time we have a bullish close, you just go. So we got in right here, right? So let's go ahead and use this as green is going to be entry, and purple is going to be stop loss. Okay, so we got in right here, right? And this kind of pushes all the way up there, closes right there. Okay, now this stop loss is going to go to the low of that candle because the next candle is forming up. So as soon as this candle closes, we go ahead and move our stop loss from that low all the way over here. The reason why we're doing this is because we let the market tell us when it's time to get out of this move. That's the whole goal of this whole strategy right here. We're letting the market tell us when it's time to get out. Because sometimes, when you get in a trade like this and you put your TP right there at the buy side and the market takes you out, you're like, oh, wow. I'm glad that I made $400 on this trade, but maybe I should have kept it running. Now, this way, you don't have to worry about it. This is a mechanical system. So, what it does, it takes you out every single time. The market is going to tell you when you should be out of the market. That is what the strategy does. So, this candle right there, as you can see, closes. Then we go ahead and move our stop loss to the next candle. And like I said, we just keep moving, moving, moving. Now that we're here, this is something important you have to think about. So let's say you're in a trade right now, right? And you see this close bearish, right? This black candle right there. You cannot move your stop loss to that low because you're only trailing after bullish candles. So you are going to leave your stop loss right there. You're going to wait for this to close because this is a bullish candle. You cannot move your stop loss under that low because I've seen it happen all the time. The market comes back, takes out that low, and pushes back up in the direction that you're going for. So you're only trailing bullish candles. If you're buying, you're only going to trail your stop loss by bullish candle. If you're shorting, you're only going to trail your stop loss by bearish candles. So this is our stop loss right there. Now we're going to move it to this bullish candle right there. We have this bearish one again. Now we're going to go ahead and move it to the next candle, to the next candle right there. Then the market takes us out right here. As you can see, that's what I mean by letting the market take you out. And if you notice, market plays around, then it ends up dumps back down. So now that's pretty much how you get into a buy on this trade. Of course, this is pretty much easy in hindsight. If you guys want to see me take this trade live, go watch my previous videos. You see me do it all the time at all my trading sessions. And so that's pretty much how you take the trade on the with this strategy right here if you're buying. Okay, so as you can see, you entered right here, right? Let's go ahead and count out how many ticks you made on that trade. So you made 421 ticks, I think. 421 ticks. No, sorry, you made 1,669 ticks. Okay, you guys do the math. I'm not gonna do the math for you. 10 times one. If you go in two contracts, that'd be 10 times whatever that price is. So maybe like 10 grand and some change. But that is pretty much what the strategy does right here, guys. Like I said, we are trailing by every bearish candle. Now let's look at the opposite of that. So I just showed you a buy. I just showed you a system. Let me show you a bearish system right here. Okay, so now we have this push up to the upside. So I guess you can consider this a break of structure, right? So you go ahead and draw your break of structure that happened right there. And what else do you do? So now we have this down bar right here, correct? Now what we're gonna do is the only time we get in the trades are when the market takes out the previous low. So we have this down bar right here, right? Then we have this candle. This candle doesn't take out the high or the low. So this candle becomes what the previous candle was, which is a down bar. So now as soon as the market takes out this down bar right here, we go ahead and put, sorry, I'm trying to see if I still have those markers on there. Okay, so what we're gonna do is we go ahead and put our entry at the low of this candle, green, and our stop loss at the high of this candle right there. So what else do we do? So now that we have that, like I said, we go ahead and show. So as soon as this candle closes, we go ahead and move our stop loss to the low of that candle right there. Okay. So as soon as this candle closes again, as soon as this candle closes again, we go ahead and move our stop loss right here. Now now we have no risk on the table. Like I said, we are trailing. If we're bullish, we're trailing by every bullish candle, and if we're bearish, we're trailing by every bearish candle. So this is our stop loss right there. Okay, so now this next candle closes. Now we move our stop loss all the way down here. Okay, so as we can see, because we are bullish, the market picked up and now it's pushing back to the upside. But like I said, we keep trailing by every bearish candle. We don't. That's pretty much how you do the system. Let the system tell you when to get out of the market. Okay, that is what the system is. Now we look at that. We made 189, 87, 187 ticks. So 10 times that'd be 1,000. 1,807, something like that. So that is pretty much what you're looking at on this strategy. Like I said, pretty much easy. That is what the strategy is. Now, the good thing about this is, like, say, you can incorporate this into however you like to trade. The reason I say that is because now you should just be looking for a break of structure, retest, and push back up to the downside. Okay. So break of structure happened right here. Break of structure happened right here. This is the strong low because this is what so this move right here, this move right here is what caused the break of structure, but this is where the move originated from to take out that high. So as you can see, what the market did, the market created a trap, took out buy side, took out sell side right here, trap people think the market was going to go down and just ended up pushing up. So how do we go ahead and trade this? So we see this in the market, right? So we know once the market breaks here, then we're going to be looking for this is what makes this a ultimate sell signal right here, right? This is just a trap. So once we know this, the market breaker structure happens, market pushes back down to the market, and then we go ahead and okay. So now we have. So as you can see, this is a down bar right here. Now this candle right here doesn't take out this low. Let me make sure. Okay. So yeah, this candle right here doesn't take out this low. So this is a down bar, but this candle also doesn't take out the high or take out low. So this bullish candle is going to be whatever the previous candle was. So the previous candle was a down bar. So this is going to be a down bar as well. Okay. Now what else are we waiting for? Now we're going to go ahead and put an entry. As soon as that candle high is taken out, as soon as that candle high is taken out, we go ahead and enter right there. What else? Our stop loss is going to be down here. Our stop is going to be down here on this market right there. So as soon as this candle closes, so like I said, I like to go in two contracts. Okay, so when I go in two contracts, and I know this is the buy side, so that way I always have some money in my pocket if this reverses against me. So I go in two contract right here, right, and this is my buy side. So what I'm going to do is, as soon as the market pushes up and takes out my buy side right there, I go ahead and take off one contract. So I'm going to leave one contract running. I'm going to drill that contract, as you can see. So one contract on this would have been 200. So this would have been about $2,000. Okay. So entry right there, stop loss down there. As soon as this candle closes, we go ahead and move our stop loss all the way over there. Now we have a tiny risk in favor. So as soon as the next candle closes, we go ahead and move our stop loss from right there over there. Now we have no risk on the table. And like I say, see how we're incorporating this into just break of structures, retest, and pushing back to the upside. We want to make this strategy so easy so that way you can understand. So you have a break of structure to the upside, you wait for market to come back to the order block or the strong level, and you, like I said, you just react to whatever the market shows you. We cannot predict the market. We can only react to whatever the market is telling us. So we pretty much know, like I said, order block came back, faked out, then pushing back up to the upside. That is pretty much what the strategy is. Like I said, we are reacting. We're using the candles. So down bar, up bar. So then we go ahead and enter. Like, I mean, it is pretty much easy. That is pretty much what it is. Now, I want to show you something. Not every time is going to work. Okay, now look at this. So we have this break of structure to the upside right there, right? And as we can see, we have this huge order block over here. What does the market after we had this bullish candle to the upside? And hope you guys put this in mind. So I mean, this is what you would call a B or C sell because we had this. So this is an up bar. This one doesn't take out that low, so this is still an up bar. Now this candle right here takes out this low, so this is going to become a down bar. Now the only time you're going to get into this trade is if the next candle was taken out. Now also like this being showing that this is a bad trade because as soon as this candle takes out the high, the next candle closes bearish. But it also does take out the high. The next hand takes out the high, takes out the high. As you can see, then eventually this bearish candle right here takes out the low of this candle. So I wouldn't. That is not a good setup. I would call that a BC setup. If you're one of those people that are always in the market every time, that is something that you might mistake a trade for, and you might get in on the trade like that. So that is not a good trade. Um, I mean, it just comes back down. I mean, look at this trade over here. So let's say we're seeing this from the market right now. So we don't know what the market wants to do. We can see this huge move to the upside, but then we have this bearish move to the downside. So most people are going to say, okay, you know what? I'm going to start shorting. So what I would do is I'm going to go ahead. I'm going to start shorting from right here. If the market breaks this low, I will go ahead and start shorting. In the meantime, I'm going to see if the market is going to hold this order block. So we have this huge order block over here, right? So what else do we go ahead and do? So we can see the market push back down. Now let's go ahead and count the candles like I showed you guys earlier. So this is going this candle was taken. So this is going to be a down bar, down bar. This candle doesn't take out the high or low, so this is going to be what this candle was, a down bar. This one takes out the high, so an up bar. This one doesn't take out the low, so it's going to be, this one doesn't take out the low or high, so it's going to be what this candle was. So up bar, up bar, up bar, up bar, up bar. Okay, beautiful. So look at that. Like I said, this is what I call the waiting game. Like I said, you want to wait and react to whatever the market shows you. So this is perfect right there. I don't think I took this trick because this was at 2 in the morning. But look how it played out beautifully. Order block right here. The market comes back. It's bouncing from the zone. So we have a down bar, down bar, down bar. Now we have an up bar with this candle. So let's say you got in right here on this candle. I personally, I mean, this is what I consider B sub if you got in on this candle right here because you always want the break of the previous candle to be bullish if you're looking for buys. But this is what I call a B candle. So instead of entering two contracts on this trade, I'll probably go in one contract. So you enter right there. Now your stop loss is going to be at the low of this candle right here. Let me use those lines. So we entered right here, right? We entered right here, and stop loss is going to be down there. Okay, so we entered right here on this trade, and look what happens. The next candle closes beneath it, doesn't take out the high, take out the low. So we have this is still an up bar because no, the high wasn't taken out, the low wasn't taken out, and the market just keeps building right there. So what would we do? So we would just trade our stop loss every time. Trail. No, so remember we're only going to trail by bullish, so we leave that right there to see next bullish candle. So trail, 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 and also remember we also had this buy side over here. So we got in two contract over here. As soon as market takes out this high, we go ahead and take off one contract. So now we just have one contract running. And like I said, what else do we keep doing? We keep trailing by every bullish candle. Let me go ahead and mark this out so you guys can see. So up bar because it doesn't take out the high, doesn't take out a little, but it's going to be what the previous candle was. So up bar, a bar, a bar. Now look at this one over here. Now this bullish candle right here takes out this low. So this would be a down bar. So like I said, we keep trading. So we have this, we don't trade to that up bar. We go right here as soon as the market closes. So now look at that. There we go. See, I mean, 10,300 and some change. That is pretty much what you are looking at. I mean, same thing happened over here. I know I haven't showed you guys a bearish example. Look at this breaker structure to the downside right there. The market pushes, closes down. So what else do you do? Because you want to wait to see if the market is going to react to this. And remember, this is the 1 hour. So if you're trading this on 1 hour, you're going to take pretty much every break of structure that you see. Now, in this case, it's a little bit different because this is going to be the whole buy side over there. So, but I'm gonna make an in-depth video early. I just want to show you guys what a bearish example is gonna look like. So we have this breaker structure down here. So what do? We go ahead and mark it out. So we have a breaker structure. Now the only time we're gonna go ahead and enter a short on this trade is if the market takes out this low. So as soon as the market takes out this low, we go ahead and with our entry right there, and our stop loss right there. Okay, so as soon as this next kind of closes, move our stop loss down there, move, and like I said, we just keep trailing every single time. Now look what happens. See, instead of us getting out of the market gets takes us out itself. So from right there, 853 takes, okay, 8,000 and some change. Now that's what I'm talking about right there. You see how we're letting the market take us out, and of course, sometimes the market is gonna fake. It's gonna grab the buy side and keep pushing to the downside. We can't control stuff like that, but that is pretty much what you'd be looking at. I mean, on a bearish example, I mean, it's all over. I'm trying to find you guys a really good one where you can see it. So I mean, it's all over the chart. I want you guys to go back and backtest this yourself. Um, and yeah, definitely backtest this yourself. Let me see if I can. Okay, it's a good example. Okay, beautiful one right there. So let's go ahead and use this example. So we have this breaker structure down here, and as you can see, market goes back to this order block over here. This order block over here, and look what happens. So how do you get into a trade like this when the market retests the order block? What you go ahead and do is you go ahead and draw your put your counting your line back on the chart. So we could this is an up bar, right? Look at the next candle. The next candle takes out this high right? So this is also going to be an up bar as well. Now look what the next previous candle does. This candle right here takes out the low. So this is going to be a down bar. Now this next candle right here, it doesn't take out low, it take out high. So it's going to be a down bar. This next candle, what does he do? It takes out the high over there. Doesn't take out the low. So it's going to be an up bar, down bar. Doesn't take out the high, takes out the low, down bar. Takes out the high, takes out the low, down bar, down bar, down bar, down bar, down bar, down bar. Right there. So you guys see the market breaks the structure, comes back to retest and pushes down. But how do we get into what you're like? I said, we waited. We had an up bar and up bar. Then our entry is going to be as soon as this candle was taken out right there. As soon as that candle was taken out right there, we go into the trade. First, our stop loss is right here. So as soon as this candle closes, we move our stop loss down there, move our stop loss down there, and like that. As you can see, this pushes down, but we get taken out by the next bearish candle, which is completely fine. Then we go ahead and we go for 108, so like 1,000 and some change. But that is pretty much what the strategy looks like. A break of structure to the upside, it retests back to the roadblock, wait for confirmation, wait for a down bar, up bar, then we go ahead and get into an entry. That is pretty much what it is. If you guys need a more in-depth video, please like and subscribe. Leave some comments on there if you guys have any questions, and I can go in depth about the strategy anymore. And hope you guys enjoyed it. Thank you so much. Bye.